Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast. We're joined right now by Massar and Tim Stenovec. We welcome our audiences across Bloomberg Radio, television, as well as on YouTube. A wild day, Carol.
Yeah.
I mean, we started off deep in the red here on the markets, but I should point out the low on the day on the S&P 500 was at 9:33 a.m. So 3 minutes into this session, about 2 hours after that, we were in the green, and right now we're not far from the highs of the day.
Yeah, pretty remarkable, right? We're really hovering and holding on to these gains that we've had, and it was quite a swing. I've been looking at the bank sector, the KBW Bank Index. It's up more than 5%. Let's not forget, we're going to get big bank earnings. JP Morgan leading it off tomorrow, but a lot of enthusiasm ahead of those results and definitely some outperformance today.
We talked big picture with Dave Donabedi and the Chief Investment Officer at CIBC Private Wealth Management. He said, we're going to be sloshing around like this, like we've been doing for a couple more months, back and forth in the S&P. But he's overall pretty positive about what equities look like in 2023. Even though we could see a recession, we could see the bottom of the S&P 500 in the early or middle part of that recession in the first half of next year. So overall, glass is half full for him.
Yeah, we're hearing similar. Just got to get through March, right, to find some stability further out. That echoes sort of similar comments. We just had Lori Calvasina on over at RBC, fresh off a revised note that she just printed, hot off the press. Looking at a downgrade now for the price target for this year, closer to 3,800. Previous forecasts were for 4,200. So, Tim, that really speaks to the sloshing around as we try to count down to this year end.
Correlations break down, though, today. In fact, they work for once. Romaine, bonds go lower, stocks go higher.
Yeah, interesting to see whether that sort of correlations, or rather that sort of decoupling to a certain extent actually holds here going forward. We're getting the closing bells here in the market. It is an update pretty much all around. The Dow Jones Industrial Average higher by more than 800 points, or 2.8%. The NASDAQ Composite higher by more than 200 points, or 2.2%. And the S&P 500 going to close higher right around that 3669 level, up about 92, 93 points, or about 2.6%. The widest trading range that we've actually seen on the S&P 500 since January 24th, 194-point swing, and that's the second highest swing that we've seen on the S&P 500 from peak to trough, both on a points basis and a percentage basis since the big breakdown back in March of 2020. Russell 2000, not to be left out of the party here, up, Carol, by 2.4%.
Yeah, I mean, all in. And if you dig a little bit deeper into the S&P 500, we're going to get into industry groups in just a moment. But the S&P 500, almost all the names, 471 higher in today's session.
Okay, well, that's good. That leaves like, what, 30 for Tim?
Yeah, it's been a struggle.
I have to tell you, he's been stewing here. He's like, I can't find any decliners.
Sometimes you got those days,
stewing
right?
for me, because, Carol, my day is also very easy. When you take a look at the sector winners and the sector losers, it is all green on the screen all day long. Let's start with some of the big winners given this banner day. It's banks, it's energy, it's dividend financials. We've talked a lot about the yields that are jumping. Banks are benefiting somewhat from that. Sprinkling in there, technology, hardware, semiconductors, some of the software and services, those are also catching a bid of about 3% as well. There were some, I guess we'll call them losers. They're underperformers. They're only up about 0.5%, even though they're in the worst performers column. It's food and staples, and it's consumer durables. It's the retailers as well on this big inflationary day.
All right, let me get to some of the gainers. I had so much to choose from, but I did go to Biogen.
Way to rub it in.
Giving you a hard day today.
Yeah, no, you really are.
All right, Biogen topping the S&P 500, NASDAQ 100. Stiefel upgrading it to buy from hold, saying skepticism surrounding its new Alzheimer's drug seems overdone. They set a new price target of $299. It closed at $269 and change. But remember, at the end of September, Biogen rallied, almost 50% after some key clinical trial data came out showing its Alzheimer's therapy slowed the progression of the drug, of the disease. But nonetheless, that Stiefel call giving another boost to Biogen today. Domino's, we talked about it. We know why. This stock up 10% in today's session, top of the S&P 500. It was a mixed quarter, but their U.S. comp sales topped the average analyst estimate, so better than some had feared. At least that's the words that Citi used. And then Albertsons, let's go there because we could see maybe potentially a big tie-up in the supermarket space, rallying. According to people familiar with the matter, Kroger said to be in talks with a tie-up with Albertsons. If so, it would create a U.S. grocery giant Albertsons up 11%.
Well, yeah. Well, the key word there is if so. There was actually a great note out by Morgan Stanley, Simeon Gutman, talking about the potential
regulatory
antitrust
concerns,
issues that they might be up against, particularly with this administration.
Yeah, we'll see what happens. All right.
All right, let's go to the decliners. Slim pickings, as you mentioned, and actually, Taylor, you did a lot of the work for me earlier, talking a little bit about consumer discretionary stocks being
so
at the bottom right here. Amazon down 0.3%, weighing on the S&P 500. Also, Etsy finishing the day down by 9.3% among the categories, too, in consumer discretionary. And then rounding it out, we got Match Group down at a record low today, down 5%.
Have people stop dating?
I don't know. You know, we're going to have to wait to find out details unless they do any sort of pre-announcement, because we're not getting earnings from that company
married
until the 1st of November.
Meanwhile, I'm totally missed on a commodities front. Did you see it?
Everyone just walked away from that one.
You were like, okay, you're married, bye. Let's get on.
Move it on.
Don't bring our partners into this, okay?
Yeah.
Wow.
Can I bring candy into the situation? Did you see that candy prices leapt about 13% in the inflation report? Let's talk about some other commodities, because candy is a commodity in my household. We're currently seeing Brent crude up 2%. In fact, commodities across the board had a good day. We were higher on the Bloomberg Commodity Index. Natural gas up more than 4%. Look, if you thought your inflationary pressures were going somewhere, not so. If you're looking at oil prices back at $94.65 on Brent, we're up at 89 on WTI crude. So managing to get a bounce at the moment. That is perhaps US dollar does roll over somewhat, and we see strengthening across the board. Maybe some of the injection of risk on attitude came a little bit from the UK in the last bit of trade. We saw the sterling up, strengthening 2% in terms of cable levels. We're seeing the likes of UK bond markets actually outperform as the Bank of England really tries to ride to the rescue here. And most notably, there's talk about a U-turn coming from the government in terms of some of those tax policies. We're looking at the euro strengthening 0.7%. As I say, the Bloomberg dollar index up by 0.4%. And look at that, the 10-year gilt, as we see, yields down 23 basis points, Taylor.
It was another story here of price lower, yield higher, and a huge rate of change kind of day, Carol. The two-year yields, we've definitely wiped out the year-to-date highs. Now looking at a two-year yield, the highest we haven't seen since August of 2007. You jump 19 basis points on the day up to a 4.48, as really many are now thinking a terminal rate of closer to 5% is now the goal. Just to round it out, a 10-year bond auction, I think, that came today, decent on the 30s as well. 10-year yields the highest now since 2010. So you're really getting some of these multi-decade highs.
Yeah, and maybe that's why banks spiked overall, or maybe there's expectations. I find it's interesting that J.P. Morgan, I think, was up 5 or 6% here on a day where, you had Jamie Dimon come out with some concerns about the economy, but those stocks really riding high in today's session.
Well, one interesting thing, though, about some of those comments, not just from him, but from a lot of folks, is, and I think we kind of touched on it at the top here, and also with our previous television guest, Lori Calvasina, this idea here that while there is going to be a lot of pain over the next few months, there is general consensus right now that maybe by the time we get to the end of 2023, things will maybe be a little bit more right-sized. And I feel like some people are maybe looking all the way ahead to the second half of next year as a reason to justify some of the valuations out there today.
I'm still trying to understand the position the consumer's in right now, and that's what I'll be listening to when we get bank earnings in the coming days, and then also next week as well. Because you get news from Domino's like we got today, and we got the news from Pepsi like yesterday, and I'm wondering if this is,
but
people
that's Pepsi
trading.
and Domino's.
I know, so I'm wondering if they're trading down, right? Actually, the Domino's CEO had some interesting commentary about being concerned about delivery in an inflationary environment, saying, okay, well, delivery could struggle because of tip, but carryout could actually succeed more.
Just in the past few days, so you get the sort of generally upside out of Pepsi and Domino's. We heard from LVMH, which said people at that end are doing well here. What about in the middle? What happens there?
Airlines still doing well. Delta, maybe.
Yeah, maybe.
Signal there that people are still willing to be doing traveling. I thought in the inflation data it was meant to be showing that our mobility, our transport costs were actually coming down a little bit.
Yeah, interesting. Don't forget we're going to get a read on retail sales tomorrow as well, so that'll give us some other clues.
Thank you.
Okay, you're welcome. Sure. You'll get my bill. All right, we got to wrap, guys. We'll be back again. Cross-platform coverage, radio, TV, YouTube. We will count you down again. Same time, same place tomorrow.